itself. Dipan Mehta, director at Elixir Equities, is joining in. Dipan, good to have you on the show as always. I'm not sure if you track Crompton, but any thoughts? I mean, this is a pretty severe market reaction to a management change. It's a straight out no, so to speak, from the market. Would you look at a contrarian view here at all? But then, as I mentioned, I mean, Crompton, for whatever reasons, has really not enthused the street in the last year and a half.
Good afternoon, Sudhi, and thank you for having me on your show. But I think what we are not factoring in over here is a very hot summer. And that's going to be very positive for Crompton, which is amongst the market leader when it comes to fans. And overall, I think the side of sentiment got a bit nervous on the acquisition of Butterfly Gandhidham, which was a major acquisition. But once they're able to assimilate, I think it does improve the product profile. And look at the way real estate sales are zooming. Certainly, I think new home sales are going to drive all the product categories for Crompton. And such corrections, I think, are good opportunities. It remains a very strong company, very good brand, and market leader in most of the categories it operates in. So I'm not that negative on the stock. And such corrections may provide a little bit of margin of safety, given that this stock has traded at higher P multiples in the past.
Okay, all right. Noted that, Dipan. Well, by the way, just to point out a couple of stocks, NCC is moving to the high point of the day. That's really been defying gravity for the last many sessions. That's at around 120 rupees. It's really unfazed by any kind of weakness that we've seen in markets periodically. In fact, year to date, it's up 40%. That's the big outperforming stock actually from the broader markets. And another one that's coming on my radar is Elixir. Take a look at the price volume action out there. The stock is up and about in today's trading session. Big move is what we're seeing on Elixir. But let's focus on the pharma space. Ipca, well, that stock is under some pressure after they got into agreement to acquire 30% stake in Unichem. That's a sizable acquisition. Ekta joins us to run us through why the street is disappointed with this acquisition for Ipca Laboratories. Ekta.
Thanks for that. Well, first the news. Ipca Labs is going to be buying 33.38% stake in Unichem from the promoter at 440 rupees per share. So the total comes to around 1,034 crores. There will also be an open offer for an additional 26%, which would be a total of around 805 odd crores. The purchase price for Unichem was at 440, which was a 13% premium to yesterday's closing. Now, what exactly does Unichem bring to the table when you talk about this particular acquisition for Ipca? Remember, Unichem had sold their domestic business in 2017 to Torrent for 3,600 crores. Now, they only had their international formulation business which remained with them, and out of that 55% is to the US in terms of supplies. They have 3 formulation plus 3 API facilities. All of the plants which do supply to the US do not have any regulatory issues. They are compliant, and hence Ipca, which has had 3 facilities which have been under the US FDA scanner since 2015, will get access to the US markets. A couple of negatives: the Unichem business is only growing at low single digits over the last 4 to 5 years. The margin profile has been weak. 9-month FY23, they did record an EBITDA loss. Hence, it could be margin dilutive for Ipca Labs. Also, niche generics, which is an arm, is expected to have a pending fine from the European Commission. Valuations, analyzing 9-month numbers, acquisition is done at an enterprise value of around 2.5 times revenue. And the likes of Incred, the brokerage, indicate that the company is paying a high valuation for a loss-making asset, hence is an expensive buy. Also, a couple of analysts that I spoke to did indicate that there could have been better utilization of funds, such as rewarding shareholders.
All right, Ekta, thanks very much for that. Market, by the way, has picked up a little bit more in terms of pace when we started. 55 points on the Nifty, by the way. And there are so many other new names, right? I mean, which was not there in the first half of the day. BSE, that is Bombay Stock Exchange, that is up 7%, 490. There was, I think, an article a few days back saying that the NSE IPO is again going to be, nowhere near. It's going to perhaps get delayed. There is the railway stocks and the Adani stocks that we've been talking about, but newer names, right? So look at something like a Voltamp, which is up about 5.5%. That's a big mover right now. Not a small, but a a troubled construction company, trouble in the past. BL Kashyap, that is up about 7.5%. Nigel was just talking about NCC. BL Kashyap is a pure contractor. Texmo Pipes is seeing a big move. It's a 20% move. It's limit up. Last Tuesday, the price was 48 rupees. It's at 65 right now. Max Ventures is another one, which is up 5%. The stock is back at 200, which was the high which was made towards the end of last year. Then it corrected all the way to about 120, and it's back to 100 almost 200 levels once again. Dipan, afternoon. Out of the names that I mentioned, anything strike a chord, or you want to tackle IPCA Unichem, which Ekta outlined?
Yeah, Prashant, good afternoon. I think this move by IPCA is certainly not well received by the market. The value of pharmaceutical business now is more on the domestic market. And of course, Unichem sold off the best of the business to Torrent. And Torrent, that business has done really well for Torrent. So trying to buy just for sake of getting exports into US is something that doesn't make complete strategic sense. But then I think IPCA has got constrained because of its regulatory track record and all the US FTA-related issues. And maybe they have an ace up their sleeve by getting the actual formulations manufacturing and the bulk manufacturing facility, and maybe have some of their products suited to that once appropriate approvals are in place. But on the whole, on the face of it, companies which are going more for global business are not preferred by the market. It's more about domestic-led stories over there. And I think we have a fabulous issue coming up, Mankind Pharma, which is one company which is almost 97% focused on the domestic market. I think that will interest many investors, professional as well as the retail, because the dynamics of operating in the domestic market are very different. And if you have a good, strong brand and distribution network and feet on the street in terms of medical representatives, then that's a good secular growth business as compared to exporting to US generics or any of the other geographies, which is fraught with a lot of risk and volatility in earnings.
Another stock doing well is Mahindra Holidays. Reported their numbers and the stock has spiked nearly 4% post the numbers. Revenue growth of 31%. Margins have expanded from 16.2% to 23.2%. So that's an over 700 basis points expansion in margins. And the profits too have seen quite the jump, 56 crore versus about 16 crore. Q4 is typically a seasonally strong quarter. Occupancies, the last time we chatted with the management, were high, trending above 85%. The European business was also turning around. So Mahindra Holidays had a lot of things firing for themselves. And of course, the fact that there is so much pent-up demand in terms of travels and holiday, strong numbers from Mahindra Holidays. But